welcome to Zee Commodity Capsule. Let's start with Brent Crude prices, which have managed to ease from the recent 5-week highs and currently hovering close to $88.5 a barrel. Now, this decline or this cool off has come on the back of the hopes growing that peace negotiations between the US and Iran could resume after several days of escalating attacks. Mediators worked on Monday to encourage both sides to agree to a new ceasefire, while reports pointed to a possibly 10-day truce. Still, oil prices have rallied sharply this month as the US attacks on Iran continued for 10th consecutive day, while Tehran carried on with retaliatory strikes against the neighboring nations. Tensions intensified when President Donald Trump warned that Tehran would be held responsible for the deaths of 3 US service members. Iran-backed Houthi militants meanwhile announced a maritime embargo against Saudi Arabia, raising concerns over energy shipments through the Red Sea. Let's come to gold prices, which have managed to shine and are hovering close to its 1-week high after having dropped in the previous couple of trading sessions to near 8 to 9 month lows. Now, amidst the ongoing conflict, we have seen some dip down, some cool off coming in case of dollar index. But with the US and Iran in conflict, investors continue to focus on the risk of energy driven inflation and the prospects of higher interest rate. Some lower level buying has definitely come in precious and industrial metals today. Having said so, US Treasury yields climbed sharply this week, with markets now pricing in about a 55% chance of a Federal Reserve rate hike in September, up from 51% a day earlier. So, currently all the surge that has come in precious metals, particularly gold, silver and other base metals, has come solely because of the decline in the crude oil prices that has been seen today. Same is the case with base metals. As I was mentioning, nickel has managed to trade above $17,000 a ton, holding near 1-month highs amid uncertainty over Indonesia's production policies. Indonesia's ongoing review of nickel production quotas remained a key focus, with the government limiting the additional approvals to smelters facing raw material shortages, reinforcing the expectations of tighter ore availability as policymakers seek to prevent oversupply and stabilize the market. LME copper meanwhile has managed to edge higher above $13,700 a metric ton, hovering near its 5-week high, while zinc has managed to surge off its recent 2-week lows. Last but not the least, Malaysian palm oil futures for August delivery has slipped below 4,600 Malaysian ringgit a ton, pulling back from its recent gains as traders locked in profits from the recent 4-week highs. Weaker edible oil prices on Dalian and Chicago exchanges weighed on sentiment, along with softer crude oil prices. Demand worries added to the slide after June palm oil imports in India dropped to a 14-month low, with narrowing price discounts curbing buying.